12 holdings in my ASX portfolio, and today we're gonna talk about A2 Milk and ASX. We talk about all my 12 holdings in the upcoming 5 videos, and this is gonna be the first one of those. Hi, I'm Michael, and we talk about all things related to investing and personal finance. And as always at the beginning, a quick disclaimer. I do not hold a financial services license and I'm not a financial advisor. So please take this video really just as informational only and not as financial advice. I'm just sharing my personal opinion and my personal situations in those videos. So yeah, starting with the first holding, A2 Milk. It certainly can be called a high flyer on the Australian Stock Exchange. It has done really well over the last years, and we're going to see that later on in the chart. But what is A2 Milk? A2 Milk is a dairy company that provides all types of dairy products, and they are focused on dairy products that contain the A2 protein instead of the A1 protein. And they have all types of normal dairy products, different types of brands that they established with the A2 brand, the main brand. So normal fresh milk products, but also baby powder and all types of other related milk products that they offer and sell. Their main countries where they do business is New Zealand, where they're actually coming from and where their headquarters is. Then Australia is one of their largest markets, and they are exporting quite a lot to China. So that's really interesting, and they try to extend their offering to US as well, but at the moment they're really focused on New Zealand, Australia and China. So looking into the chart, as I already mentioned, the company did actually very well. It got established in 2000, and I have the 5-year chart and the 1-year chart here for you. Starting with the 5-year chart, you can see that the 5 years ago, so in 2015, the company had a price from around $2.50 and was able to grow that value of the company now up to over $18 per share. And you can see that the growth of that share price is actually quite consistent, yes, with a little bit up and down. And you certainly can see that last year there was a bit of a question mark on if they can keep up with the future growth, but they have delivered quite an outstanding performance. Looking into the 1-year chart, you can see that that over the recent time they actually did really well. They were not as affected as many other stocks in March from our current pandemic. But yeah, and that's great to see. And you should think that that could be a bit of a bigger problem because they're exporting a lot to China, but they were actually able to keep up with their deliveries and their exporting, so the revenue was still able to grow. So you can see there was just a very small dip, but then straight up again and very stable future growth expected. Looking into the financials of the company, so yeah, they have incredible financials when you look back into the last 5 years. Outstanding growth in revenue and equity. And they I think the current equity growth rate sits at around 33%, and for the revenue, I think it's very similar. So it's really awesome to see, and the equity growth rate in the past was even more. So they had 3-digit percentage growth rates in the past. So when you look 4 years ago, they were around 80 to 100% revenue growth each year. The current PE ratio for the company sits at around 35 to 40, and it's a company that doesn't pay a dividend. So you keep your, or you gain your income or a potential investment return just from the increase in the share price. Looking at the current reporting season, so they have reported their revenue, and as I mentioned, the revenue was up this year 33%, and as I mentioned already, luckily not too affected from the current economy question mark around the pandemic. And very great news here as well, because they are growing so much, they got included in the ASX 50, so they are now part of the list of 50 largest companies here in Australia, listed companies here in Australia. And it's just a really great sign to see that the company is also growing that much. Now, looking a little bit into the performance of my holding on A2 Milk, I first bought into the company in September 2019, then sold little bit of my position in January 2020 when it actually was getting quite high, and bought back into the company with increasing my position in April this year. The performance of A2 Milk in my portfolio is currently at around 13%, and my average purchase price of A2 Milk was just below 16 Australian dollars, so 15.9 Australian dollars per share. So yeah, going and speaking about the next holding, ASX. What is ASX? ASX is basically the primary security exchange here in Australia. So all major listed companies you can purchase through the ASX. And there's really not much competition going on here in Australia. It's really basically the only security exchange here in Australia. And therefore the company has a very strong position and is also financially doing very well. But starting with looking into the share price, I'll bring up the 5 years chart here, as you can see, and yeah, there's a consistent and stable growth in the share price, as you can see, from back 5 years ago at around 40 Australian dollars, and now in basically their recent level on 88 Australian dollars, and that level is basically, they hold that since mid last year. And there, if you look at the share price, and we look closer into the share price from the 1 year chart, you basically can see that it basically is on one level, even though the financials, as we will later see, are actually quite good and looking strong. But you can see as well at the end, we are now basically about to break out of that parallel line, which I obviously as an investor would hope. But yeah, I'm still very, very confident with that investment, especially for the long term. Yeah, looking into the financial, it's a very stable financial situation that they're in. The growth rate, the equity growth rate, sits at around 13% year on year. So each year you can see very stable numbers of their equity growth rate. The revenue grows year on year as well. That growth rate sits at around 7 to 9% each year. It's a little bit fluctuating, but sits at around that level. The current PE ratio is at between 30 and 35. And other than A2 Milk, ASX is actually paying out a dividend, and that dividend is actually quite nice. So they pay out 90% of their earnings as a dividend, and the current dividend yield is 3.5%. And they have increased their dividend this year by 4.5%. So that is always nice to see when companies are able to increase their dividend with holding the payout ratio consistent. Yeah, so I almost covered a little bit of the reporting season there. So yeah, they said they will be able to increase the dividend payout, and also the strong financial health. They basically confirmed what the position is, that their revenue growth will be sitting at around 8%. So those were the latest update, and the share price reacted positive to that, as you could see in that little spark at the end of the share price. Looking into my performance with ASX, first bought into the company back in 2018 and sold off again that same year, the same size of position. Then I was without a holding for a couple of months, and I bought back into the company in April 2019. Again, sold some in January 2018. I think that was a time where I felt like, ooh, the market is going a little bit ahead of itself. And even though I was really not thinking about what was coming or what could come, but it felt like I was very careful at that time, and I sold off out of some of my positions. So I reduced the position. I don't sold everything, but I basically reduced the position in a lot of my holdings, which you will see in all my reports that I will present. And I bought back into the company to increase my position again, same as I did with A2 Milk in April. My performance in the portfolio with ASX is just below 16%, so 15.78%. And I basically bought into the company with an average share price of 67.66%. And it certainly would have been beneficial if I would just have held my position back in 2018, because I was able to bought into the company, I think, at a level from around $66 per share. So if I would just had hold on to the company, to my shares, that certainly would have created an even better return. So yeah, recapping on those two stocks. I think those are really great investments. Both companies have the potential to grow. Yes, in different levels and certainly different types of company structures there. So ASX, more of a conservative business. You can see that the future growth is there, but very conservative and ongoing, and on a lower level than with A2 Milk. A2 Milk, high growth, no dividend payouts at the moment, and still it looks like that they're able to maintain this strong growth over the next years. In the next video, I'm gonna cover the next 3 holdings of my portfolio, which is carsales.com, Coles, and CSL. So look out for that video tomorrow. And yeah, I thank you for watching this video. Subscribe to my channel if you would like to see future videos like that as well. And don't forget to like that video. Thanks for watching, and I'm gonna see you in my next one tomorrow. Until then, bye.